Hello, this is Cryptolyze. I hope you are well this Thursday, September 14, 2023. It is with pleasure that we meet today to talk about Veracity's crypto. As usual, we will dissect it into two parts. A fundamental part, we will come back to what Veracity is. You will see that things have changed a lot in the meantime, that there is a lot of news, not necessarily positive, but we are going to review all of that. And then we will project ourselves into the prices and the technical analysis to see the state of the prices, whether short-term, medium-term, long-term on purchase prices, sale prices. And you will also see that maybe there is something to be done. Veracity originally was a technology that was really focused on NFTs and the notion of esport and the notion of digital asset management in gaming and everything related to all that. This is actually the example of the old site when I started to prepare a first video on Veracity. And we see that the partnerships were mainly PUBG Riot Games, in which we actually had the structure of an all-in-one wallet, which made it possible to manage absolutely all the assets in a three-web ecosystem for gaming. And when we go down a little bit, we had the VERTOKEN, which was in a slightly particular economy, which allowed we'll come back to this because we'll see the price difference and what happened. You will quickly understand. But the VRA was used mainly to create incentives with game developers, influencers, those who were sponsors or who published on all the events that were correlated. We had the notion of watching streaming. So I was watching streaming for example, my esports. And so I was touching arms in relation to the advertisements that were broadcast. And on that, they actually built a news technology and a new image a little bit, which is this image here that we see now, which is the new standard of verification. Of verification of what? Through VeraView, verification of people watching. So it's really the notion of proof of view that they invented with the POV, which makes it possible to verify whether the person who is viewing the advert, therefore the advertisement, is really a living person, and that it is indeed someone concrete. We know very well that there are a lot of bots in the world which in fact watch and increase the number of views artificially, and this mainly helps to limit that. So yes, it's true, but there are already quite a few other technologies that make it possible to do that. In particular, the technologies developed by YouTube, which make it possible to greatly counter false views and the impact on campaigns. So on that, it bothers me a little bit, the communication that there is, because it's an area that I know relatively well. But you have to understand that historically it represented up to 40% of the volume. And on the last 10 years, we are less than 10% agree. It has greatly decreased. And yes, it is an element in addition to the review, allows us to do a little more. I think they are at 94% or 95% of verified or verifiable content. So we are in something that is interesting. Yes, but we gain quite little. In fact, we gain a 5% difference compared to the technologies that have been carried out. On the other hand, it is true that these current technologies are technologies which are proprietary to YouTube. Here we are in something which is not proprietary, which is a solution which we can buy, whether we are YouTube or not. And so it's a big advantage on the side. But the important thing to remember is that Veracity has changed suddenly. Really through its image too, in the sense that now we have this new image, which is the new standard of transparency, therefore transparency, with the image before which was really focused around gaming. Here we are more in the idea of offering an identity verification and validation solution. Because overall, that's it. We check if the person is really human, if the person who is present and looking is really human, whether for advertising or not. So on that, I'm just going to come back to this slide because it's important. The price was at 0.20 at the time. I made this preparation at the time, and we were on a max supply of 10 billion. We are no longer at all on a max supply of 10 billion. We are on a max supply of 100 billion. So on that's where we're going to get to on the shift. They suddenly changed their image. They immediately changed their will and their business model. They created VeraView, which allows verification. So it's a product, and next to it, they created ex nihilo, really from scratch, new tokens. And here we are currently in a max supply, which is much more important. They have created more than 90 billion of tokens. So on that, I will stop you right away in relation to the communication that was made. I will give you my opinion, I will give you their speech, and I will give you my opinion in relation to this speech. This opinion only corresponds to mine agreement and the representation, and why, for my part, I have a vision which is perhaps a little more harmful on this project. So firstly, the concrete vision that was given, why there was a creation of 90 billion tokens. Already they said that there was 80, we are going to make a little Picasso, but there are 80 billion which are linked to VeraView, okay, which allows the execution of VeraView. Overall, these 80 billion tokens will be used to, in fact, systematically link campaigns and views to each advertisement and will be mined and burned systematically to be able to manage. And that normally is not supposed to enter a circulating supply. Okay, it is not supposed to be able to arrive in the primary market. They are stuck in a smart contract, which is dedicated to doing just that. Besides, they mined an additional 10 billion for what? They call it the war chest, which allows companies to be bought. It's the company buyout. Okay, so that means that we doubled the supply just so that they have a war chest, just so that they can simply buy the companies. That means that they diluted by 2. Absolutely all the investors who held real property clearly agree. That's it. Just with that, just with these 10 billion. So already on this, I'm going to enter into my opinion. I think there is a big problem because in this regard, we are not minting 90 billion when we already have 10 billion holders. Well, 10 billion tokens, which are held by people, by investors. For me, there is really a breakdown in the trust that is put in place, whether it is here, the 80. Okay, the 80, we're going to discuss it later, but the 80 is already a success, but we'll discuss it later. If only on the 10 billion of war treasures, finally, never we divide, well, it's not possible. On that note, that's one of the reasons why we had a price that collapsed. We'll look at it later in the graphs, but there, it's really already catastrophic in terms of communication, in terms of reflection, in terms of, well, there it is. It's absolutely, they decide to do what they want with overall the money of the people who bought VRA. It also reminds us that we buy VRA, but it is not a stock. Okay, we have no say. It's just a utility token, basically. So it also reminds us of our place when we buy a token of a crypto, that we do not own the company that operates it. We own absolutely nothing, in fact, especially since there is almost no notion of DAO and therefore of decentralized decision-making body. So we are in something that is really different. And here I'm going to talk about the 80 billion. So that for me is a false excuse because clearly no developer will ever say, I'm going to create 80 billion more in the token that already exists, Minte, to be able to use it in my Veracity protocol. At that moment, you create a second token, which is linked to the main ones, and which will have its real function of being minted and released according to the campaigns. It is a token which works on the very usefulness, and that is very easy to do. And this is something that is normal. Releasing 80 billions, there I think that there is, well, for my part, I tend to say to myself there, in addition to the breakdown of trust, I do not have confidence in these 80 billions. I'm told that they are blocked by a smart contract. Okay, well, historically, let's agree the mintage and the max supply. It is also supposed to be locked by a smart contract. So that means that in the very design of the smart contract, they put the possibility of being able to do that. I have not gone to see a smart contract that holds the 10 billion, but I am sure that we will see news that will arrive. So either new billions of VRA that will come out, or at that time, a part that will be used for something else. And the other thing that bothers me is when I look at the CMO's explanation. So the explanation took a long time. It took half an hour, well, a half-hour video on that. The question I ask myself is, okay, the notion of campaign interfacing is actually missing. That is to say, okay, we have the main VRA, which is in circulating supply, and then we have the VRA, which is not in circulating supply. Okay, already having this conception and this thinking poses a problem and greatly hinders the investment. Already basic, it's really very complicated. And secondly, it's what's the interconnection between the two? On that, strangely, he didn't answer that part. He explained that in fact the fiat exchanges were purchased in bulk from the circulating supply and that the bulk goods which are attached to the protocol itself were just used for internal exchanges, okay. But it must be understood that internal exchanges are the same principle also of a token like Evra. That is to say, the VRA itself should be used in exchanges internal, and it should not work at that moment in a token creation. It is the token itself and should be used for that. It is the principle of Ethereum. It is the principle of all blockchain tokens themselves. So yes, I agree, Veracity is still a little separate, but at that point, if it's separate, We make a new token. We create a token like VET did. We has the VET, which creates new tokens, which will be used. We have exactly the protocols, which work very well with 2 tokens or even triple tokens. Why wasn't this done on Veracity? Why was this communicated so poorly? I think that the idea was not there, and that doesn't mean that no matter the 80 billion, we still have 10 billion, in which clearly we have been halved, all those who hold VRA. Personally, I do not hold a VRA. I have never held one. I was planning to potentially think about getting it into my portfolio at attractive prices. Clearly, at present, this will not be the case. And once again, this is a personal opinion about me, what I am looking for as a form of investment. Remember that price. But I'm not there. That is to say that the notion of trust, from the moment it is broken, it is over. So this is my personal opinion, and this is how I do business. So at the technical level, we have the establishment of a very nice distribution. We have a classic accumulation phase, bullish acceleration on the first part of the bull run of 2021, with the establishment of a BC ARST SAO. If you don't know this, simply look for distribution on Wyckoff, where there is information on the Discord, which is in the description of this video, in which we have set up the sign of weakness, the accumulation of week off, on reaccelerates. We do the uptrust, the UT, and then the UTAD for the last liquidity gain, and then we collapse in November 2021 before the establishment of the bear market that we experienced at the end of 2021. So which was at the end of November and the beginning of December, and then we had the bullish phase of 2023, but here we are really in something which is very descending, very bearish, with a very strong bearish impulse. A lateralization which took place while during that period we had a BTC and all the altcoins, which were pushing. There we just had a lateralization and then a bearish break, which necessarily took place in April. And following this bearish break, we see that we had the break here of Terra Luna. We had here the lowest, which was made within this part there with Celsius, and we continue to sink. We continue to sink without news. Okay, we made a new low in July, we made a new low in September, and we meet again with a new low in November with FTX. And we see that we continue to sink at the acceleration at the start of the year 2023 with a small break of structure which was made. And there we are in a form of compression here, compression which is relatively strong. We see it clearly this way where the level here of 0.039 is held by the price, held temporarily. For me, I tend to tell you that if we look at how it is constructed, we see that we have the beginning of reaccumulation, which is being carried out, and we have a big imbalance to find here for all this part to fill. So it is completely normal to look for at least the 0.032s first. I tend to tell you that we will continue to dilute the token, and for me, we will even look lower. We will look here in the 0.14, so which will be for me a zone, really the end zone of the spot zone. Look, my spot zone is still relatively wide. You said that we could go very, very low, and yes, I think we will go very, very low. And here I remind you of the image that we had earlier. When I made the video, we were at 0.19. Okay, we are at 0.039. Here we are really in a dilution, finally in a real loss, which is minus 95%, almost minus 94%, I believe, compared to the ATH, which was carried out as a reminder to UTAD at 0.088. Okay, we really have a big bearish breakout. At present, will we be able to do a new ATH? I don't think so. It's one of the rare assets. There are a few, but it's one of the rare assets where I think we won't make any new ATH. We could have the bet on a next bull run in place of a marketing incentive communication to increase speculation, to look for key levels. For me, we can look here for the 0.035. We can even look for why not a little higher, the 0.05, but going higher is going to be really complicated. I think that in these areas, what will happen is that the war chest will be diluted and we will have downward pressure, which risks being relatively strong to be able to benefit from the next bull run. Not us, but Veracity to go drain funds, to do other actions. Clearly for me, this is what they have in mind, unless this is not the case. If this is your opinion, do not hesitate to tell me why in the comments. It is with pleasure that I will react to it. But from my side, it's a bit the idea that I have. So for me, we're really going to work if we really want to expose ourselves in a notion of going to make a purchase, to go and retest similar parts and go for relatively low search, potentially here in the 0.20, to at least ensure here, even the first TP to take on a retest of this bit there, we will have a 400% to get, okay? So we will be more in a notion of speculation to look for other targets a little higher, but we will have to take profits for me relatively quickly because there are other people who will take profits, and clearly this will be Veracity. So we don't forget the approach they took, what happened, the communication they had, and there clearly we still have functional choices which are just unjustifiable. Anyway, that's my opinion. My opinion from someone who is used to designing products and projects in development, who knows this type of business. We are in something that is still unique, and that is one of the reasons why, for me, trust was broken on this project. I hope you liked this video. If so, don't hesitate to tell me what you think about it in the comments. Even if your opinion is different from mine, don't hesitate to put it in any case. We will be happy to exchange, and don't forget to give a little like. It always makes me very happy, and it supports the work I do. If you like this type of video, I'm sure you liked or will like the video I made yesterday on A0, the blockchain token. Of level 1, which aims to offer scalability to more than 90 transactions per second to SMEs, I will provide you with the link. There, and we meet at 7 o'clock for the daily